So what is the Medicare levy? In this video, I'm going to explain what the Medicare levy is in Australia. In Australia, the Medicare levy is a tax that helps fund the country's public healthcare system, which is called Medicare. Most Australian residents and taxpayers will have to pay this levy. As of 2025, the standard Medicare levy is 2% of your taxable income. Here's how it works. Calculation. The Medicare levy is calculated based on your taxable income and is in addition to the regular income tax. For example, if your taxable income is $50,000, your Medicare levy will be $1,000, which is 2% of $50,000. Let's look at another example. For example, our friend Matthew earns $76,000 per year. He has $1,000 of allowable deductions he wants to claim this year. Matthew is single and does not have any dependents. Matthew is not eligible for any Medicare levy exemptions or reductions. So all these things considered, Matthew will pay a Medicare levy of 2% of his taxable income. This is how Matthew would work out his taxable income. Matthew would work out his taxable income using this formula. Taxable income equals assessable income minus allowable deductions, as shown below. So $76,000 take $1,000 equals $75,000. So the amount of Medicare levy Matthew pays is $75,000 times 2%, which is $1,500. The Medicare levy is automatically calculated when Matthew completes his tax return. Let's now talk about who can get a Medicare levy reduction or exemption. Low income earners. If your income is below certain thresholds, you may qualify for a reduction or exemption. For individuals, if your taxable income is at or below $26,000, you are exempt from Medicare levy. For families, the combined income threshold is $43,846, which increases by $4,027 for each dependent child or student. If your income exceeds these thresholds but remains below the upper limits, so $32,500 for individuals and $54,807 for families, you may qualify for a reduced levy. This will automatically be applied when you lodge your tax return. Seniors and pensioners. Individuals eligible for the Senior Australians and Pensioners Tax Offset, or SAPCO for short, are exempt if their taxable income is at or below $41,089. For senior and pensioner families, the threshold is $57,198, which increases by $4,027 for each dependent child or student. Again, if your income exceeds these thresholds but remain below the upper limits, so $51,361 for individuals and $71,497 for families, you may qualify for a reduced levy. And once again, this will automatically be applied when you lodge your tax return. Let's have a look at this worked example. Our friend Ashton is 68 years old and his taxable income is $41,700. Ashton has a spouse, no dependent children, and is eligible for SAPTO. Ashton's spouse's taxable income was $29,700. Ashton is not eligible for the Medicare levy exemption. Ashton and his spouse's family taxable income is $71,400, which is their combined income. Ashton is entitled to a Medicare levy reduction based on his family taxable income. Ashton completes his tax return and his Medicare levy reduction is automatically applied based on the information he provides. Ashton uses a calculator provided on the ATO website to determine his Medicare levy amount. After entering his and his spouse's details like so, he learns his Medicare levy will be reduced to $56.54. Non-residents and foreign residents. If you are a foreign resident temporarily working in Australia and not eligible for Medicare benefits, you are exempt from the levy. You can claim this exemption when you lodge your income tax return. This exemption is known as Exemption Category 2 on your tax return when you complete the Medicare levy section. For example, our friend Mohammed is a resident of Pakistan. He comes to Australia to work and earns income for short periods in the income year. Mohammed's family lives in Pakistan and Mohammed always returns to Pakistan when his work finishes in Australia. Mohammed is considered a foreign resident for tax purposes. Mohammed can claim a full exemption from paying the Medicare levy because he is a foreign resident for the full year. Specific medical conditions. Individuals with certain medical conditions may qualify for an exemption. Details on eligible conditions can be found on this page on the ATO website, which I'll link down below in the description. Non-entitlement to Medicare benefits. If you are not entitled to Medicare benefits, for example certain visa holders or foreign diplomats, you may be exempt from the levy. You can go visit this page on the ATO website, which provides several examples. To claim this exemption, you need to obtain a Medicare entitlement statement from Services Australia. You can visit the Services Australia website for instructions on applying for a Medicare entitlement statement. And for more detailed information and examples about the Medicare levy and exemptions, I'll leave a link down below to this page on the ATO website. I would encourage you to read through them. Please note, all the information in this video is accurate as of 2025. If you're watching this later in the future, please verify the details on the ATO website in case anything has changed. Let's now talk about the Medicare Levy Surcharge. The Medicare Levy Surcharge is an additional tax imposed on Australian taxpayers who do not have an appropriate level of private hospital cover and whose income exceeds certain thresholds. So basically, they'll charge you more tax if you earn too much and don't have private health insurance. It is designed to encourage individuals to take out private hospital cover, thereby reducing the demand on the public Medicare system. From the 2024 to 2025 financial year, the Medicare Levy Surcharge income thresholds and corresponding surcharge rates are as follows. For singles, income of $97,000 or less will pay 0% surcharge. Income between $97 and $1 and $113,000 will pay 1% surcharge. Income between $113,001 and $151,000 will pay 1.25% surcharge. Income of $151,001 or more will pay 1.5% surcharge. For families, combined income of $194,000 or less will pay 0% surcharge. Combined income between $194,001 and $226,000 will pay 1% surcharge. Combined income between $226,001 and $302,000 will pay 1.25 surcharge. Combined income of $302,001 or more will pay 1.5% surcharge. For families with children, the income threshold increases by $1,500 for each dependent child after the first. How to avoid paying the Medicare Levy Surcharge. To avoid paying the Medicare Levy Surcharge, individuals and families with income above these thresholds can obtain private hospital cover. So go speak to a few health insurance companies and tell them you want to avoid paying the Medicare Levy Surcharge, and they will provide you with the appropriate level of cover you need. In most cases, it's cheaper to simply pay for hospital cover than to pay for the surcharge. You also need to know about lifetime health cover. Lifetime health cover is a loading added to your hospital premium if you didn't have private hospital cover from the year you turned 31. It is a government initiative that encourages you to purchase and maintain private patient hospital cover earlier in life. If you have not taken out and maintained private patient hospital cover from the year you turn 31, and then you decide to take it out later in life, you will pay a 2% LHC loading on top of your premium for every year you're aged over 30. For example, if you take out private patient hospital cover when you are 40 years old, you could pay an extra 20% on the cost of this cover per year for 10 years. If you wait until you're 50 years old, you could pay 40% more per year for 10 years. Please note the maximum LHC loading that can be applied is 70%. Once you have paid your LHC loading for 10 years of continuous cover, you will no longer have to pay for this loading. If you cancel your private patient hospital cover after paying for the LHC loading for 10 continuous years, you may become liable to pay for the LHC loading again if you take out another private patient hospital cover later on. Let's now go through our final example. Our friend Tom does not have the appropriate level of private patient hospital cover and is 35 years old, single, without any dependents. Tom earns $90,000 per year at his job. When Tom completes his tax return, he also declares $30,000 of capital gains from selling some shares. Tom's income for Medicare Levy Surcharge purposes is $120,000. Therefore, Tom is a Tier 2 income earner and the Tier 2 Medicare Levy Surcharge rate that applies to him is 1.25%. The amount of Medicare Levy Surcharge is calculated on his taxable income of $90,000 and total capital gains of $30,000. Therefore, Tom's Medicare Levy Surcharge liability for this financial year is $1,500, which is $120,000 times 1.25%. It's important to note that the Medicare Levy Surcharge is separate from and additional to the standard 2% Medicare levy that most Australian taxpayers pay. Many people get confused about this. While you can avoid paying the Medicare Levy Surcharge, you must pay the standard 2% Medicare levy unless you qualify for one of the exemptions we discussed earlier. For more detailed information, you can visit the ATO website. By the way, if you're enjoying this video and made it this far, comment the word medicine down below so I know who you are. And if you're new around here, what are you waiting for, mate? Hit that subscribe button and join this awesome community of like-minded people. Also, please consider signing up for my free newsletter, Aussie Money Club, where once a week I'll send you some money tips, major news in the market, or any cool life updates from me. And if you're interested to learn more about Australia's tax system, check out this video on screen where I explain how the Australian tax system works for beginners. And as always, thank you for watching, I appreciate you, and I'll see you in the next video.